Good afternoon, everyone. On behalf of FSN E-Commerce Ventures Limited, we thank you for taking the time to join us today for this landmark event in the journey of the company. We welcome you to the virtual brokers and analysts meet on the announcement of the company's forthcoming IPO. Before we begin, I will take a moment to introduce the spokespersons from the company. We have Falguni Nair, Executive Chairperson, Managing Director, and CEO; Advaita Nair, Executive Director; Anchit Nair, Executive Director; and Arvind Agarwal, Chief Financial Officer. We have senior investment bankers also with us on the panel who represent the lead managers to the IPO. We have Raj Balakrishnan, Managing Director at BofA Securities India Limited; Arvind Vashisht, Managing Director and Head of India ECM at Citigroup Global Markets India Private Limited; Viren Jairath, Director, Equity Capital Markets at Kotak Mahindra Capital Company Limited; Shashank More, Executive Director at Morgan Stanley India Company Private Limited; Santosh Verma, Executive Vice President at ICICI Securities Limited; and Abhishek Bhagat, Managing Director, Digital and Technology Investment Banking at JM Financial Limited. I'll now do a quick walkthrough of the conference guidelines. All microphones have been placed on mute. We will have a presentation by the company spokespersons, followed by the Q&A session. The questions can be typed in the Q&A panel available to you, and they will be read out to the management in the Q&A session. I now invite Raj Balakrishnan from BofA Securities India to initiate the proceedings. Over to you, sir.
Yeah, thank you, Gaurav. Friends, on behalf of the management of FSN E-Commerce Ventures Limited, that is Nykaa, and the BRLMs to the IPO, it gives me great pleasure to extend a very warm welcome to all of you to the broker and analyst meet for the launch of the FSN E-Commerce Ventures Limited IPO. We at BofA Securities are proud to be a book-running lead manager to India's leading digitally native, lifestyle-focused consumer technology platform. I'd like to take this opportunity to firstly introduce the company and then the members on the panel. FSN E-Commerce is India's largest specialty beauty and personal care platform and one of the fastest growing fashion platforms. The company delivers a content-led lifestyle retail experience to consumers. It offers a diverse portfolio of over 4,000 beauty, personal care, and fashion brands, including 15 own label brands to consumers through both online and offline channels. Nykaa's mobile app has been downloaded over 55 million times, and it operates 80 physical stores across 40 cities in India. In FY21, 17.1 million orders were placed for beauty and personal care products with a total GMV of approximately Indian rupees 33.8 billion. Nykaa also saw strong growth momentum in the first 5 months of FY22, with users placing 10 million plus beauty and personal care orders and generating a GMV of approximately 19.3 billion rupees. To quickly introduce the management team we have with us today, Mrs. Falguni Nair is the founder, executive chairperson, and managing director and chief executive officer of the company. She has over 26 years of experience in e-commerce, investment banking, and broking. Prior to founding the company, she was associated with Kotak Mahindra Capital Company Limited for 18 years, where she also served as a managing director. She's also served on the boards of various companies, including Tata Motors and Aviva Life Insurance. She's won many awards, including E&Y Entrepreneur of the Year 2019 for startups by Ernst & Young and Businesswoman of the Year at the Economic Times Awards for Corporate Excellence 2019. She holds a postgraduate diploma in management from the Indian Institute of Management, Ahmedabad. Ms. Advaita Nair is an executive director of the company. She also serves as the chairperson and chief executive officer of Nykaa Fashion. She co-founded the company and has been involved in the areas of marketing, operations, and product development. Post her academic pursuits, she rejoined FSN Brands in 2017 as chief executive officer in FSN Brands to create and strengthen the offline retail footprint of Nykaa. Since 2018, she's established the Nykaa Fashion business and currently oversees NykaaFashion.com, as well as many of the company-owned and partner brands. She holds a bachelor's degree in applied maths from Yale University and a master's degree in business administration with distinction from the Harvard Business School. Mr. Anchit Nair is an executive director of a company. He also serves as the chairman and chief executive officer of Nykaa e-Retail. Anchit has previously served as a vice president in the investment banking division at Morgan Stanley, New York. He's currently responsible for the beauty business and also serves as a member of the investor relations team. He joined FSN Brands in 2018 as the chief executive officer and has overseen the expansion of the retail Nykaa stores. He holds a bachelor's degree from Columbia University. Mr. Arvind Agarwal is the chief financial officer of the company. He is a chartered accountant and a qualified company secretary. He's also completed the senior program, management program from IIM Ahmedabad and holds a bachelor's degree in commerce. Arvind has over 21 years of experience in various fields, including accounting, finance, regulatory, and strategic planning, with organizations such as Amazon Seller Services, Vodafone India, Tata Teleservices, U Telecom, and Adani Ports. Let me now just touch on the key investment highlights for this IPO. Nykaa is addressing the massive Indian beauty and personal care and fashion markets, which are expected to reach 28 billion and 124 billion respectively by FY26. These markets are highly underpenetrated today, with only 8% online penetration for BPC and 12% for fashion. Nykaa offers consumers an omni-channel experience with its physical stores offering the touch and feel experience often needed by consumers to arrive at a purchase decision. Nykaa's inventory-led model in beauty and personal care and managed marketplace model in fashion, where only brands authorized distributors are onboarded as sellers, enables them to ensure authenticity of products sold to consumers, which is very important in this space. Nykaa is a pioneer of driving widespread product and influencer-led customer education. Today, Nykaa is one of the most influential lifestyle platforms in India, with over 13 million followers across leading social media platforms and has a network of over 3,000 influencers. And finally, Nykaa has a capital-efficient business model with a unique combination of strong growth at scale and profitability. Just touching on the IPO details, the IPO will open for subscription from October 28th to November 1st. The anchor round will be on October 27th. Shares in the Nykaa IPO will be issued in the price band of rupees 1,085 to 1,125 rupees per share to raise up to Indian rupees 5,350 crores, including primary proceeds of approximately Indian rupees 630 crores. With that, let me hand back to Gaurav to take the proceedings forward.
Thank you, sir. I now invite the company spokespersons to take us through the presentation. Ladies and gentlemen, the floor is yours.
Good afternoon, everyone. It's an immense pleasure of ours to be with all of you today, to be able to tell you a little bit of our story so far and be available for any question answers that you may have. So I'll begin with a simple slide which talks about our key milestones, and that kind of summarizes a short journey of about 9 years. Nykaa was incorporated in 2012 as an inventory-led e-commerce business focused on beauty. We always wanted to be multi-brand retailer for beauty, offering beauty through what we call as art of retailing and a lot of customer education. We opened our first physical store also early on because we believed that beauty needed to be an omni-channel business. And while many customers will buy online, once in a while, they would like to come into our store and experience the certain products. With that began our journey on physical retail as an equal partner in our e-commerce journey. From there, we moved on to launch our Nykaa Cosmetics brand in 2015, our first private label. And since then, we've launched many private labels, including Nykaa Naturals, as well as a K-Beauty, which is our joint venture brand with Katrina Kaif, our celebrity brand. And more recently, we acquired Dot & Key, a skincare brand that will help us address the skincare needs of Indian consumers. We also took the industry leadership early on with Nykaa Femina Beauty Awards and got a lot of recognition as experts in the industry. By 2016, we launched our luxury offering through participation by Estee Lauder. And since then, we've gone on to build excellent offering on the luxury side with some of the great international brands like Huda and Charlotte Tilbury also now listed on our website. By 2018, we realized that customers also wanted us to offer fashion, so we ventured into fashion business. And over the next few years, we ramped up the fashion business very quickly, so that today it contributes about close to 25% of our GMV. We supported fashion business with a private label strategy where we acquired a brand called 20 Dresses in 2019 and Pippa Bella a little later. We also launched our own private labels in Naked, which is a lingerie and athleisure brand, as well as Gajra Gang, which is our ethnic wear brand. We believed in content-led commerce, and hence we launched something called Explore, which is an in-app content aggregation hub where we brought all our content on social media into this watch and buy feature, a very unique offering by Nykaa in India. Secondly, we also developed hyperlocal capability for delivering customers from our physical retail. This was a necessity of the time during COVID lockdown, and we treated it as a way to develop our platform further from a tech perspective. We continue to build new businesses with launch of Superstore, which is our eB2B platform initially focused on beauty, and also the Global Store, which is a platform which brings some of the best global brands into the country through our offshore global store. Next. With that, I'd like to share a small video about our brand.
जुल्फों को तू बिखरने दे, पलकों पे सितारे उतरने दे, तेरे जश्न में सबको घुलने दे, ख्यालों में खुद को खोने दे, चेहरे पर चांदनी निखरने दे, रंगों का मेला लगने दे, रेशम सी रोशनी झलकने दे, गालों पे गुलों को खिलने दे, अपनी धुन में खुद को संवरने दे, खोए हुए सिंगार के दिनों को फिर से आने दे, इस बार तू खुद को खूब सजने दे, नायका तू खूब सज।
So with that, let me start with saying that we are today one of India's leading consumer technology platform with a very wide yet curated assortment of beauty and fashion products, more than 3 million plus SKUs from 4,000 brands, and almost 13 million cumulative transacting consumer base. We are a digitally native platform with a separate app for beauty and fashion, and more recently, Man and the Superstore. 55 million cumulative downloads so far, of which 88% online GMV comes from our mobile apps. This is something which many of you may be aware of, that there is a significant headroom for growth at each level across India's digital use case funnel. Since the access to internet is almost available to 50% of the population at 660 to 690 million households, as we come down, online shoppers is just about 150 to 180 million, which is only 11 to 13% of the customers. We believe that this will increase to close to 24 to 28% as a source being the Red Seer report. And that will provide a multi-year opportunity for growth for e-commerce companies like ourselves. China, of course, as you're all aware, sits at a higher penetration of 46 to 50%. And that leads us to a superb market opportunity of about $152 billion TAM, total addressable market. Beauty, I think, is much smaller at $16 billion, beauty and personal care, but expected to grow to $28 billion over next 5 years. Of that, 72% is organized and 8% is the online penetration. Now, when you look at fashion, that's a bigger market of $54 billion now and expected to grow to $124 billion by 2025. And of that, about 12% is online. Both these TAMs show that we have multi-year opportunity for growth in both our businesses. And today we built one of the most influential lifestyle platform in India. through simplifying purchase decision through inspirational and educational content. We have beauty and fashion blogs, a YouTube-based platform with 1.2 million subscribers, social media presence with 13.4 million followers across many Instagram handles, and a peer-to-peer social community of 3.5 million members. And all of that we leverage through our in-app content aggregation hub, where we are getting almost 4.4 million visits in the first 5 months of August 2021. This results in customers spending as much as 95 million hours on our platforms annually. And this results in a self-reinforcing flywheels, driving strong network effects. Content-first approach to retailing begins with rich content, leading to higher organic traffic, leading to more engagement and a better experience overall. And on the other side, it leads to more consumers with more lifestyle segments that we can offer, more brands and more sellers, and more transactions that further reinforce more customers on the platform. This enables Nykaa to become a much loved consumer brand. And all this is supported by a proprietary technology stack.
Numbers and 75% from our beauty businesses. In my understanding, we've not given that split at other metrics like revenue, but Arvind, you can correct me.
Yeah, you are right, Advaita. So, in terms of revenue, actually, revenue recognition depends on accounting conventions, and it depends on different business model. In beauty, we are predominantly inventory-led, whereas in fashion, we are predominantly marketplace-led model. So the revenue recognition differs for both. In first case, we get the net sales price down to the revenue. In second case, it's the take rate which flows to revenue. So it's not comparable at revenue cut, and therefore we publish GMV cut. And there you can see that fashion is now 25-26%. This is first quarter numbers.
Thank you. Next question. You have a fairly strong stable of brands associated with you. How have you managed to get those brands to work with you and none of your competitors or horizontal retailers?
I'll ask Anchit to answer that question. Sorry.
Yeah, sure. So I think this goes back to the fact that being a vertically specialized retailer, we have invested heavily in marketing technology to create a platform that truly allows brands to create equity in the market, in the sense that they can actually do brand building and create awareness amongst our consumers. And this goes back to my point earlier around the art of retailing. So as an e-commerce company, we took the conversation away from discounts and liquidation to the conversation being more about the efficacy, the quality, the use, and the benefits of the products that our brands were creating. And I think that has gone a long way in helping us to help them to create a very sustainable business in India. And as a result, they see us as partners, and they see us as partners for the long run. And so I think that's what's allowed us to be successful and have deep partnerships with not just the mass brands, but even the luxury brands. And I think luxury brands do not discount their products at all. So Nykaa is a great partner of choice for them, because Nykaa is a platform where they can actually do brand building and sell their products as opposed to having to rely on price. I don't know if there's anything else you'd like to add.
And imports.
Yeah, and the other quick thing I would just like to mention is, we are also today a large importer of brands into the country. So there are tremendous global brands who may not have the bandwidth to be able to do business in India on their own. They do not have an office, employees, etc. So Nykaa can serve pretty much A to Z for them in terms of importing them, registration, pricing, go-to-market strategy, distribution, etc. So we really play a very holistic role on behalf of those brands. And a couple of examples of brands for whom we've done that have been the likes of Huda Beauty and Charlotte Tilbury, which are some of the most well-known brands globally.
Thank you. Next question. And this is a question that has come from multiple participants. Could you please explain how you've arrived at the valuations?
So I think in general, the valuation has been arrived at based on a guidance that we have received and comparables with international and national, similar industries. So I think this was a role that from bankers to the analysts to all the investors, we met more than 120 investors all over the world at the time of our anchor book building. And we have received a number of, in the number of, it was a very detailed, detailed meetings with these investors who actually have then come back and told us how they look at the valuation, and the current valuation is arrived based on that. I would like some banks to jump into that if they want to.
Sure. Thanks, Shalini. So I think just to answer that question, I think as is the case with all the IPOs, I think it's fair to assume that any kind of valuation, the band is based on a significant amount of marketing effort that the banks undertake along with the management of the company. The process of international roadshows, meeting foreign institutional investors and domestic institutional investors, has been undertaken for over 3 weeks, as Falguni spoke about, meeting over 100 investors. And based on inputs on the comps that are trading in the market, especially global markets, an assessment is made on the comfort and the guidance given by these investors, on the basis of which the valuation range is determined.
Thank you. Next question. Could you please help in giving a perspective on why the EBITDA to operating cash flow ratio has improved significantly in FY21? What has changed in FY21 versus FY19 and FY20?
Arvind, would you like to take this question?
Yeah, I'll take that question. I just want to start by saying it's not just FY21. I think the key point that I want to make first is that we have been EBITDA positive consistently for last 3 years, which is why we didn't require too much of capital. Now in FY21, it was a tough year due to COVID. But despite that, we did 6.6% EBITDA, which is like 200 bps improvement. So what's playing out in our favor are two important drivers, which I already spoke. One of them being that the share of repeat business or existing customer has gone up to 70%. So Nykaa enjoys very strong consumer engagement and loyalty, and that shows in our number there. And because of that factor, marketing cost as a percentage comes down. Now, the second very important factor which drives our unit economics is average order value, which continues to improve. And it has seen a jump shift after COVID in FY21, but happy to say that it's sustaining at that level even in this year at 5 months. So healthy average order value, almost double of industry average, means that fulfillment cost as a percentage to revenue is less than 10%. So these are two very important factors. The third factor is more of operating leverage, which comes with the scale, but that we are flowing back, and we are using that efficiency to build up our new verticals in fashion and men. So we are increasing our marketing spend so that we can acquire the customer more aggressively. So that's profitability coming out of various drivers in terms of unit economics.
Thank you, sir. Next question. On the omni-channel front, could you please tell us the breakup of your online and offline revenues, and if the margins therein are different or comparable?
Yeah, may I request Anshit to take this one?
Yeah, sure. So I can give you rough numbers around the online versus offline split. I think as of the last quarter ended June, the split was, I think, about 90% plus came from our online channel. So that's our apps as well as our mWeb and desktop. And about sub 10% came from our offline physical retail stores. And physical retail stores, just to remind you, we have about 80 of them across 40 cities. Whereas online, of course, we deliver to all 26,000 plus pin codes of the country. And we also have 2,500 plus brands online, whereas in our physical stores, obviously due to space constraints, you cannot have more than, say, 70 or 80 brands. So it's not really an apples to apples comparison, but that's the split as it stands today.
Thank you. Next question. What is the procedure that you follow for onboarding any brand? And is there any process to remove any brand in case of controversies or complaints on products?
Yeah, I think this can be answered both by Anshit and Advaita, first for beauty and then for fashion.
Yeah, sure. So as I said, on the beauty side, we are predominantly an inventory-led business, so 1P model. And so we buy directly from our brand partners or their authorized distributors. As a result, we have quite a stringent process for onboarding a brand. There is a lot of, one is, of course, all the legal metrology and compliance documents that are required are taken from the brands. And then there is a registration process for them to share all their products with us so we can actually quality check the SKUs that will be listed on our platform. So there is a certain aspect that is required by law, which we are completely adhering to. But then there is even an additional layer of checks that we do on our end to ensure that we are only offering the best quality and the most relevant brands to our customers. So as a result of such a stringent process at the time of onboarding, there is not a large churn in terms of the number of brands that are removed from our platform. It's a very, very small number, and it is usually done in exceptional cases.
I think on the fashion side, it's a bit of a different philosophy in the sense that we also do put a lot of emphasis on onboarding and being very discerning at the time of listing brands. But in fashion, there's also a lot of emphasis on delisting, just because in terms of our positioning, being very curated is at the heart of it. So we're monthly delisting products that either don't make sense from a fashion perspective, or they're not the right quality, or we're getting a lot of returns, or customers are getting bad feedback. So there's a very healthy mix of delisting that's constantly happening. And I think this is essential to being really truly curated.
Thank you. Next question. With fashion being the larger target addressable market and also one of your growth verticals, the mix of that segment will grow for us in terms of GMV. So where do we see the working capital requirement ending up? Do we see it increasing?
In fact, the fashion is done on marketplace, most of the business. So it's not very inventory intensive. And we may do some more, like private label is there, but that's not very inventory intensive. And we may do some amount of fashion on inventory base in future, but I think the percentages are very predominantly marketplace led.
Thank you. Next question. Could you please talk a little bit about your strategy to expand into tier 2 and 3, since all of your offering or most of your offering seems to be luxury or prestige?
So a couple of things. Right now itself, about 60% of our business comes from tier 2 and 3 cities. And this is kind of similar both between beauty and fashion. So we already have a very good reach in tier 2 and 3 city. The growth rate of tier 2 and 3 city demand is higher than the tier 1 cities. And hence, we believe that that percentage sale in these cities will continue to go up. Secondly, we do believe that customers' AOV, customers' choice of brands, doesn't vary too much between tier 1 and tier 2 and 3 cities. So we have seen similar customer behavior across various cities. And lastly, we also do believe that for further penetration into tier 2 and 3 cities, we'll have to go more vernacular, and we'll have to go more, voice rather than just traditional, English speaking, English base app. So I think there is a lot of effort being made on those fronts, and that is also further driving up growth.
I think if I could just add one point, I think the question was phrased slightly differently, but I think it's a misunderstanding that a majority of our products offered are luxury. Luxury beauty accounts for a minority of our total sales. I think a majority of our sales on the beauty and personal care side still comes from what we refer to as mass and prestige brands and products. So we have a full breadth of offering, as I said at the beginning, spanning all the way from mass to luxe. But a minority of our products and a minority of our brands are luxury. And however, everything else that was mentioned around average order values being similar across tier 1, 2, and 3 towns holds true.
Thank you. Next question. Your fresh issue has been upsized by around 100 crores. What led to this upsize? What was the thought process behind it?
May I request Arvind to address this question?
Yeah, surely. So we have increased our primary requirement from 525 to 630 crore. That's about 20% increase across 4 objects, which is capex or capital expenditure on setting up new retail stores and also expanding our warehousing capacity, and also augmenting our working capital, repaying certain high cost debt, etc., etc. But the key reason for revision upwards is because basis quarter 1 performance, we are quite aggressively planning expansion of retail stores and warehouses, and also planning to increase our spend on marketing, as I already spoke. So our capital requirement is higher than our initial assessment, which is why we have increased the primary in the RHP stage.
Thank you. Next question. Due to your experience in BPC, are there any consumer insights or preferences that get translated into the fashion segment as well? And do we have any plans to increase our cross-selling between those 2 verticals?
I think it's a very interesting question. Thank you for the question. I think Agata will at least tell you where we are on that, category marketing of, to our customers. So Agata, would you like to come in and then we can talk about the future?
Yeah, sure. So, I think we've been really intrigued by both the commonalities and the differences between beauty and fashion as businesses. So in terms of things that are common, I think both are driven very much by content-led commerce, very inspiration-driven. They're categories where women are really looking to be inspired. And so I think that whole ethos Nykaa has around creating content to inspire women holds true in both businesses. I think in terms of how they're different, so we've already spoken about the operating model, and I think that's a pretty big difference, the marketplace versus inventory. There was a whole lot of technology that had to be built separately to address the marketplace business. So that was one way in which we did something incremental and we couldn't build off what beauty had done. I think another big difference is actually, one might not guess this, but actually the way women shop for beauty and fashion are fairly different as well. So fashion has huge proliferation. We have 2.5 million products on the fashion site, and we have about 250,000 to 300,000 products on the beauty side. So just that comparison in number can show you the proliferation. What that means is actually you really have to do a lot more in terms of discovery on fashion. Women often in fashion are much more browsing-led rather than in beauty, which is a lot more intent-led. So this has huge implications in terms of how search is designed, how sort is designed, how recommendation widgets are designed. So that's been like kind of a fun difference to kind of work upon. But despite these both commonalities and differences, I think what's been wonderful about building fashion within Nykaa is building off of the infrastructure that the core Nykaa has. So the first is the customers. We've been able to leverage some amount of beauty customers, though there's been a ton of new customer acquisition that was not from the beauty base as well. But still having the trust in the brand name Nykaa has been a great boon to fashion. We've also been able to leverage technology, HR, finance, a lot of core functions that have been able to support both businesses. So it's been a lot of both commonalities, differences, and some leveraging that has been possible. But net, I think we feel very good that we built a separate fashion app because it's really allowed us to design an app and an experience that is very true and specific to fashion, which is really quite distinct from beauty.
Thank you. Another question that has come from multiple participants. Could you please share your take on the competitive scenario with reference to other horizontal players or other niche vertical players? How does Nykaa see them evolving, and how does Nykaa compete?
May I request Sanchit to take this question?
Yeah. So I think, look, the reality is all of the competition that you are referring to today in the market, both the horizontals and the verticals, have all been around since the early days of Nykaa, right? So some of them were even in the market before Nykaa was a company. So 2012, 2013, the horizontals as well as the vertical players have been around. And the reality is Nykaa has managed to build a significant, sizable and sustainable business despite some very deep-pocketed competition being in the market since the beginning. So we think from time to time, the emphasis on beauty does tend to come from the horizontals, and it will continue to do so. But the reality is that when I look at the horizontals, their focus tends to be more on price discounting led, retail. And that is not that in our opinion is a very subpar experience for the customer as well as for the brands, because it leads to the commoditization of the beauty business. So I think Nykaa, I spoke about it earlier, but Nykaa's focus on what we call the art of retailing. So leveraging content, creating aspiration, education, awareness, also by guaranteeing complete authenticity is something that cannot be understated. Horizontals are marketplaces. They can not guarantee the same level of authenticity of the products retail on their platform that we can. So it's really a combination of things that Nykaa has done over the years that has allowed us to survive and even thrive despite the competition being in existence. With regards to some of the vertical retailers, again, there's no one who is doing everything that we are. So even on the vertical side, there might be some competition online, but they don't have any physical retail footprint offline, and vice versa. There might be some competition offline on the vertical specialty side, but they don't have any footprint online. So also, if I look at the brand assortment that we bring to the table, the mix of mass and luxury, the kind of exclusive brands that we import into the country. So really, the list of reasons why we've continued to remain successful is endless. And we think competition will continue to remain as it is, but we will continue to widen the gap between ourselves and them going forward, because we are highly focused and highly specialized in this sector.
Thank you. Next question. Your RHP does not set out any comparables in your basis of offer price. Is there anyone globally that you would say you're similar to?
May I request Banks to come in here and talk about comps?
Yeah, I think from a comps perspective, while the RHP didn't set it out, the way at least the feedback that we have sought, and from a comparable perspective, it's a mix of global beauty brands, global vertical focused e-commerce players, and the leading Indian consumer leading companies. These are the three category of comps that one should consider.
Thank you. The next question. Could you please talk about your physical stores? Are they company owned or are they on a franchisee model? And what is the typical capex that goes into each format of store, the Lux and On Trend, etc.?
Yeah, so our stores are company owned and operated stores. They're not franchised. And we have two formats, one called Nykaa Lux and the other one called Nykaa On Trend. Of course, the amount of capex that goes in depends on what is the size of the store. On an average, the size of the on-trend store is about 800 square feet, whereas the Lux store is about 1150 square feet, which is all there in the prospectus. So I think the size of the store, the average size of the store is that, but within that, there could be bigger and smaller stores. So the actual cost capex depends on that. We do believe that our capex is, Arvind, do you want to come in over how many years we write off the capex instead of guiding on exact amount of capex per store?
Yeah, so the life of asset is about 3 to 5 years. Different components, like electronics has 3 years, and furniture is over 5 years. And capex spend also in the range of 4,000 to 5,000 square feet, depending on the format. So there's no one number that we can give here.
So 4,000 to 5,000 rupees per square foot, roughly.
Yeah, depending on the format.
Yeah.
Sure. Thank you. We'll move to the last couple of questions now. How does Nykaa sustain its no discounting policy since your industry is driven by high cash burn going to discounted sales and merchandise?
We do believe that our brand partners also like it that way. So we do pass on discounts to customers which are brand funded, and we make a lot of effort. We have large joint business plans with brand partners which are quite intense. They are annual plans, they're quarterly plans, they're monthly plans, and we do work very closely with our brands to give best offers to our consumers, both in terms of discounts as well as mini strategy, or whether we give free products and GWPs on purchase or cart rule based discounts. So there's a lot we do working with our brand partners for the customers, and I think customers does enjoy that. We do not believe that we should discount brands from our pocket, because that is something that brands also don't appreciate. They lose value. And secondly, I think some of the platforms do feel that that is the way to acquire a customer. We actually want to acquire a customer through education and content and engagement rather than just discounting. And we think that is a higher quality customer who stays with you longer. And that has been successful for us in the past, and we'd like to continue doing that.
Thank you, ma'am. Next question. Could you please share what the contribution of your owned brands is to total revenue in fashion and beauty?
We have it together for both the businesses. I think our brands account for 7.5% of our net revenue, which is a weighted average percentage between beauty and fashion. This is for the first 5 months of this year. That's the percentage contribution. It tends to vary slightly from quarter to quarter, depending on the strategies and the growth of the multi-brand platform versus single brand platform. Sorry, I said a wrong number. It is percentage to GMV, not net revenue.
Sure, thank you. And the last question for today. What is the policy of disposing or writing off some of the inventory that we may have, either obsolete or expired?
May I request Arvind to take this question?
Yeah, certainly. And I think before I come to that, I just want to qualitatively say that we have very strong supply chain forecasts and inventory management practices, due to which our inventory losses are very low overall. In fact, they have been quite healthy and less than 1% kind of numbers. We also have very strong partnership with brand to track the inventory position and negotiate either a sale, a joint sale kind of thing, or else we return to them, and there are RTV clauses and stock correction clauses negotiated with the brand. So overall, very healthy equation. Inventory losses are not a worry, at least based on our past experience.
Thank you. Thank you, ladies and gentlemen. That brings us to the end of the Q&A session. Now let me invite Arvind Vashisht from Citigroup Global Markets India for the vote of thanks.
Thank you. Ladies and gentlemen, on behalf of the senior management of Nykaa and the book runners, thank you very much for taking the time out to attend this broker and analyst meet. This is indeed a very proud moment for Nykaa, for its founders, Mrs. Falguni Nair, Anchet, Advaita, its senior management, including Arvind, and all its employees. We'd like to congratulate them on reaching this very important milestone. In a very short period of time, Nykaa has become India's national online champion in the broader beauty, personal care, fashion, and wellness e-commerce vertical. Nykaa has done that by consistently putting its consumers first, technology at the heart of all its operations, all the while being very capital efficient with less than $80 million of equity capital invested in this business since inception. It's an inspiration for India's startup world, which is at the moment booming, and all the upcoming entrepreneurs. We are confident that this IPO will be very successful given Nykaa's unique positioning and the validation we've received from institutional investors while Nykaa was marketing its story to investors. We look forward to your support for the IPO. Thanks again, and we hope for your support. Thank you very much.
Thank you, sir. And thank you everyone for joining the virtual brokers and analysts meet of FSN E-Commerce Ventures Limited for their forthcoming IPO. Please feel free to reach out to us for any further queries or email us at nykaipo@nykaa.com or ipo@adfactorspr.com. We will do our best to reply to your queries within 48 hours. Take care and stay safe. Thank you.
Thank you.